What does the One Big Beautiful Bill mean for you? Hi, my name is Danielle Mila. I'm a financial planner and tax professional. Let's get started. The One Big Beautiful Bill is massive. It's nearly 900 pages. You're probably lucky you didn't have to read it. Touches almost every sector. It's 4.5 trillion in tax and spending cuts, and it extends the Job and Cuts Act signed into law by President Trump. It's pretty much Trump's presidency campaign rolled into one document. Whether or not you think it's beautiful, please let me know in the comments. I thought it'd be easiest to break down the One Big Beautiful Bill into 4 parts. One is who benefits. Second, implications or impaction of the bill. Third, what does it mean for middle-class families? And lastly, what does it mean for retirees or older Americans? Who benefits? It's like the song, who, I really want to know. The first one is corporate America. They're seeing a lot of tax cuts. A lot of people think that these tax cuts will trickle down to the average American, reducing the cost of goods. But this is often not the case. Most of the time, the extra money is then paid to CEOs for larger CEO packages or high-paid earners. Tip-based workers are getting some relief through the No Tax on Tips program. It's not completely tax-free, so be aware that you'll still have to pay state income tax, Medicare, and Social Security tax. But it's up to $25,000, so it's a nice benefit. And there are some income phase-outs to be aware of, and we'll talk about that later. It's also income specific. So just because I'm a financial planner and I receive a tip doesn't mean I'm included as part of this program. You may be more willing to take overtime knowing that up to $25,000 will be federally income tax free. There are some income phase outs to be aware of, just like the TIP program. And this applies up to 2028. We'll see what happens after that. High state tax residents, like those who live in California or New York, will get a slight benefit if you itemize your tax return. The SALT deduction, which is for state taxes, are going from $10,000 to $40,000. Here's an example. Let's say your annual income is $150,000. You bought a car, which is $5,000 of sale tax. You had state income taxes of about $10,000. You have 2 properties. Each property has about $10,000 in property taxes, and you had some miscellaneous sales tax of $5,000. In 2024, you can only deduct up to $10,000. But now, in 2025, you could deduct all of it, up to $40,000. So it might be a huge benefit for those who pre-plan this. As I said, the One Big Beautiful Bill covers many sectors. Less revenue from the tax cuts mean bigger deficits or higher projected national debt for the future. So what does this mean for you? In the short term, it means that households may see lower taxes. In the long term, this may mean higher rising in taxes later on and reduced spending of federal programs, which we're seeing that already, and accepting higher borrowing cost if interest rates rise. As I said, there's been a lot of talk, especially now, about reduction of federal revenue and where that money is going to be allocated. There's been a lot of pressure specifically on Medicaid budgets. A lot of states have been looking at potentially tightening their eligibility or looking for other ways to fund the state programs. For low-income families, this may mean reduced access to healthcare resources. For caregivers, it may mean that they may need to take money out of their pocket to pay for the care recipient's care and have more caregiving responsibilities. For hospitals and clinics, this may mean a strain on resources, longer wait time, or reduced services. I worry that there may be an overall poor health, especially for those who have untreated chronic illnesses, or those who delay preventative care. For middle-class families that were looking for some tax relief, I'll give you a hug and tell you that you did get some relief, but probably not as much as you would have wanted. The standard deduction had a slight increase and extended. So a person who has a couple who has a joint income of $150,000 will have a benefit of around $4,000, not including any other deductions. As a tax professional, this is nothing new, and this is what I expected to happen. The child tax credit also got an increase from $2,000 to $2,200 per child. I'm shaking my head because the child tax credit hasn't increased since 2018. So this was long overdue for some inflationary changes. There's also a car interest loan deduction. This is you can deduct up to $10,000 in car loan interest for a new car manufactured in the US. Just keep in mind that it's new cars bought in 2025, not 2024. Many dealers are providing about a 4% interest for a 5-year loan. So a $300 to $500 yearly tax savings is probably not going to affect your car buying decision, but it's a nice little add to have. There are other One Big Beautiful Bill benefits, but they're dependent on your employer, your ability to save, or whether or not you're eligible. For example, if you don't have any extra room to save in your budget for your child's college fund, the enhancements to the 529 plans may not benefit you. Or if your employer does not have child care benefits, then you may either want to seek an employer that has those benefits, or you may accept the fact that your current employer doesn't have that benefit. For seniors trying to figure this all out by their own, I hope to provide some clarity today. Free Social Security has actually turned into deductions for seniors. Each person over 65 will receive a $6,000 deduction. Keep in mind that there are income restrictions. Not everybody qualifies. But it's possible to have total deductions for a couple up to $46,700. This includes the standard deduction base for filing jointly. Everybody receives that as long as they file jointly. The extra standard deduction for seniors, which is $3,200, and then the One Big Beautiful Bill has the senior deduction of $12,000. So this is a big win, as long as you're able to utilize it. Estate tax increased up to $15 million per person. I'm not going to go too much into this because it will only affect about 1% of the American population. Most families couldn't deduct for charitable contributions due to the current setup of the itemized deductions on a tax return. Now, people can deduct up to $2,000 in cash donations. I hope this re-engages the middle-class households previously lacking a tax incentive to give. Just keep in mind that it's cash donations. It's not your property given to Goodwill. RMDs will continue. The minimum amount, this is a required minimum distributions. You must withdraw from certain retirement accounts. The most popular ones are 401ks and IRAs. This is pretty much Uncle Sam saying, you contribute to these accounts tax-free. Now we want you to pay tax on these things. There was a federal staffing requirement that was set to require nursing homes to have a nursing staff requirement. The goal was to have better quality of care, but now it's delayed until 2034. So 95% of facilities are not required to have a certain minimum nursing staffs. This may mean that residents have longer wait times, miss medication, or have less attention. Families may end up bearing either the financial or physical responsibility of this. So while you're touring a nursing home in your area and looking through your long-term care plan, make sure you're touring those communities and asking critical questions to make sure it's a good fit for you or your care recipient. As I said, there's a lot of income phase outs throughout the One Big Beautiful Bill. Everything in yellow is from the One Big Beautiful Bill. If you are not careful, it is very possible that you may not see the income phase outs and disqualify yourself from these deductions. So be very careful. I hope you found this presentation informative. Here's how to reach me if you have any other further questions. I would appreciate if you could like or comment below.